dive in. Can you guys see the screen share as well for some of the things?
Nope, just you.
All right, let me turn that on.
There we go.
All right, thank you. Well, want to welcome everyone to the call. I certainly appreciate you guys taking some time to dive into some of these things and get some updates. I know it's the holidays and there's a lot of stuff going on, man. I've been watching the emails and all of the texts and the calls that I'm getting, and it's just we're very busy right now, and we want to make sure that we can just continue to help folks. For a lot of people over the December months, they kind of make a decision to slow down, to kind of go offline and kind of pull back and do some stuff like that, with family and just get ready for Christmas and New Year's and all that. And then there's just a whole other group of people that actually kind of go full steam ahead. And so we've been seeing some of that. And, again, this morning, I got some more emails from investors saying, hey, you know what, I'm going to try to go out and swoop up as many portfolios as I can, and just trying to figure out, how we can help and what we can do. And it kind of ties into the conversation that I want to have today. I'll try to keep it to just 30 minutes today as well. But, over this time, especially right now, I'd kind of like everyone to take the approach in, what can I do to help investors, to help borrowers right now, and really focus in, on not just the programs, but thinking strategically. How do we help, the investors, or how do we help the business owners and entrepreneurs, with the programs that we have. And I tend to look at, every submission that comes in, I look at it, and for those that I'm involved in, and even for my own deals, I try to just get a good feel. I like to pick up the phone, talk to those borrowers, and have a one-on-one conversation. And the old school methods of selling it was always face to face. One of my original mentors, I always remember that when I first met with him and we sat down, he drew the funniest thing on a piece of paper. He took the piece of paper and he just held it in front of me, and he drew a circle on one side and a circle on the other. And he said, that's it. That's how you make money. And I was just like, what does that mean? And he said, belly to belly, right? In other words, face to face. It was the funniest thing. But because of today's technology, everything's different. That, and because of the digital world, we pull leads and business and borrowers from literally all over. I made a couple of LinkedIn posts just yesterday, and I've already got cannabis borrowers reaching out saying, hey, like, with all of the new stuff changing in the world, like, we have deals. We've been trying to figure out who to talk to, where to go. And I mean, immediately their deals submitted right in my own hometown at that, from people I knew that had no idea that we were doing business in the cannabis industry. And so, my goal, part of the conversation today is always, again, how do we create strategies to help our borrowers, or to help entrepreneurs or business owners get access to the capital that they truly need, and help them see the bigger picture. How do we help them in a way that it's not just, a right now fix, but a more of a long-term fix? So I want to look at just a couple of, what I like to call case studies, in essence. One of those right now, I've got a borrower who came to us. Dave, this is one of your clients, for I think it's for Michael, but they came to us with the ownership of a studio or a theater, really nice, like, actual theater out on the East Coast. And with everything going on with COVID, and they aren't just a theater, but an actual studio setup. Like, when you watch, like, where movies and stuff are filmed on movie sets, like, they own a whole series of sets. And they came in looking for just equipment. And we set them up with our equipment lender. We found out, after some back and forth and collecting all the right documents and conversations with them, once we got into, pulling credit, looking at the financials, looking at the historical financial snapshots of kind of how their business works and how it functions, we also saw, like, within the bank statements that they had some of those daily, like, MCA payments coming out, and some of those types of things, which were just unhealthy for any business. They can be good for a short-term fix, but then the problem is, how do you get out of that in the long term? and they really didn't have a solution. Now, the thing is, they came to us, they were looking for equipment financing, was what they initially applied for. When we got to looking at the whole picture, we figured out like, hey, you know what? The thing that's taxing you guys most and stressing your financials and could potentially hinder you from actually getting any type of loan that you need, any reasonable type of loan, is all of these MCAs that are coming out daily. Like, it's strapping your cash flow. They didn't even realize, like, a lot of times, like when you can refinance and reposition and out of those, man, it can lighten the load on your cash flows like tremendously. And so once we got into the conversation, I called them up and I said, hey, you know what? Our equipment lender called me, and they kind of said, hey, you know what? There's a lot going on here. We've got some slow pays going on. We got even a couple of late pays, but they mentioned that you guys had these daily payments coming out. And I said, I bet that's probably the strain on your business. So we looked at the whole total picture. And we said, we know you need this equipment, but there's actually a whole better avenue for you guys where we can actually consolidate these crazy MCAs and daily payments into just one term loan that will give you one monthly payment and eradicate these crazy high rates and all this that you're paying, then set you up with the equipment funding you need, as well as a working capital line for 200K. In that scenario, it wasn't just about, how do I just push this, this one equipment deal through the system, but stopped and took a real and truly like holistic approach to how do I create a strategy for this borrower, something they're not thinking about. And literally, when I shot them a quick email, I said, you know what, here's what I'm seeing, but here's another one of our lenders that I talked to. Here's a conversation I had with our original equipment lender. The reply that I got back from the borrower was just such excitement. In fact, what she did was she immediately looped in, I think it was like her CFO and one of her other business managers. And the email was basically stated to the fact that they were excited that someone took the perspective to think about how to help them solve the whole equation, and not just look at how do I throw them in another high rate, equipment deal just so they can get by. And that's really the approach I think that we should always take when these deals come in. There's a lot of brokers out there that will just say, man, let's just get them a quick, down and dirty equipment loan to get them what they need, get them out the door, make 6 or 8 points on the deal. And that's just, to me, that's just not the right way to do business, because it doesn't really build a relationship and it doesn't help the borrower for a longer term solution. In other words, you get them in something that might be high rate, you might make some money now, but it doesn't help that business survive. And now I'm not saying that, we've got to take on the world's problems. It's not that at all. But what I'm saying is that we have so many solutions at our fingertips within our network that we can certainly work to help make their lives better. And not only that, but if you can accomplish that for those borrowers in thinking along those terms, then you can also open the door for when they want to scale, for when they want to refinance other things, purchase the real estate. We've had borrowers that came in the door thinking they just wanted working capital. We're able to help them with that. Then they come back and say, well, you know what? We actually want to buy the building that we're in now. And now, so they've gone from an equipment or a working capital deal to an actual real estate deal. And so when you can think about how you interact with these borrowers, it's something to where you got to have the bigger picture in mind, almost like the greater picture, as I'd like to say. The other morning, Pat shared something in our Slack channel internally that centers around the fact that every interaction with a potential lead is a branding opportunity, helping them understand who we are and how we are. And I think that's really the greatest approach. Thinking of just another scenario, and Shaw, Pat, I'm sure you guys, even Sherry, you guys have some scenarios like this as well. But we have another real estate investor who just kind of said, hey, I'm trying to scale my business. I want to grow it. I want to take it to the next level, but I'm not sure what programs are going to be best for me. And, they wanted to say, see if they could just get set up on another fix and flip. And I said, well, you know what? We have these exposure line programs. And we also have 100% programs for both new construction, and we have 100% also for fix and flips. And they just had no idea. So I said, but you know what? We also, depending on where your credit score is, let's see if we can get you set up on the 100% program and see if you also may qualify for what we call these days, some gap funding. which could be the credit card stacking or some type of installment or term loan. There's no hard inquiry to figure out the qualifying, but it's just another avenue to say, here's the type of loan that you need to get you to the 100% so you can go do more deals. And this particular borrower has done something like 18 to 25 flips in the last, I don't know, three years. And so we knew they had the qualifying, the qualifications on the flip side. They had over 100,000 in liquidity. And we knew from their experience, their score was a little lower, but probably because they've had, the whole world out there pulling their score, thinking they need to keep going back, to different lenders to keep qualifying. And that was something that was just another factor that I was able to address with them. And I kind of said, hey, you know what? You do not need to take that approach to figure out how to keep building and growing your business. We will figure out for you, because of the programs that we have, how we get you to the 100% for your fix and flips. And when you're ready, even up to 100%, up to 70% on the ARV for your new construction because of your experience. And these, most of our programs, many of them are not even score driven. So they're asset driven based on your experience, your cash flows, and what your goals and objectives are. We can certainly help you meet those. So, I was able to put forth a scenario to where we say, look, here's some programs that we think can work best for you on 100%. And, I've mentioned this before. One of the things to be careful about, even on the 100% program in the bigger markets like the New Yorks and, again, New Jersey, Connecticut, some of those just larger markets, they really even need closer to 75% on the ARV because the price of everything is so much more expensive. And so I was able to show them, like, listen, we get you to the 70%. And so you'll need, you may need in those markets that extra 5%. Of this particular bar, I think, is in Chicago. So we'll look at also, what other gap funding can we put in place to help you as just like a whole solution to what they're needing. And they've just been ecstatic. So we've been working with them just the past few days, looking at the deals that they're bringing in, helping them price out some of those transactions. So look at how they may stack up with the 100% program. We're looking at how do we bring the gap funding to the table. And now that they're understanding how, we had them send us over a couple of deals so that we can price it, put it together so they could see it, figure out numbers, start understanding how it works. And now they're just like all in. They're looking at deals that can meet the program requirements, right? So now we've kind of flipped the script a little bit, whereas they were just going out, finding deals, bring them in. Now that they understand the requirements of the program, they're looking for deals that meet the qualifications so that they can move through underwriting quickly, right? So it's a whole different change of mindset, but that's how you take more of the approach of like a private capital consultant rather than just being another broker out there. We have the lenders and we have the network, and nowadays we are a correspondent lender when it comes to real estate stuff. We even have the ability to table fund in certain situations. And we are approved FHA correspondent lenders on for FHA programs for multifamily, new construction, certain portfolios, what they call scattered single family residential portfolios, things of that nature. Won't get into all that now, but the programs essentially are here. We have full access to those programs, and we're using them and leveraging them every day. So again, it goes back to, when we look at some of these different submissions that come in, it's always best pick up the phone, talk to your borrower, and listen. When you get on the call with them, it's good to simply listen. It's not about necessarily trying to sell them on anything and everything, as I've mentioned before. It's more about listening to their goals, listening to their needs. Make sure that when you're in the CRM, if you've got that contact already in, which if they filled out some type of form that the CRM creates a lead for them, you can click into that contact, and at the very top of the screen, click the call logs or calls, and you can click that and then click log the activity, and you can actually log the call and throw notes in there about that phone call. You can even tag your account manager and so forth, so that you have the history recorded of the conversation, so that everyone is privy to what it is that they were seeking. What was their goals when they hit submit on that form and sent that information over, so that the account manager has access to look and see that information and make sure that as they're helping and advising you, even in advising those borrowers, that everyone is in sync and on the same page. We have some very powerful tools available to be used for, and it's there for those reasons, in order to help you be more efficient and more effective at what you're doing. one of the things I wanted to look at too, we have started now to rebuild the YouTube channels, the LinkedIn channels, the new LinkedIn page, the Facebook page, and I wanted to show you guys really quickly some of that stuff as well. Before I do that, were there any questions or comments, any feedback or thoughts on anything that we've kind of touched on so far? All right. If you've got a question, please feel free to interject. So over in the new YouTube channel, I want to click on that here for a moment. We've started to upload some videos there. We've got a lot, you know, I've mentioned over the weeks that we've been working on some. We've decided to kind of revise, fine tune some. We just launched this just in the past like 2 days, 2 to 3 days, and started uploading it. And now we're starting to actually market it out. We're adding videos on commercial financing, really separating out like unique one-off videos on specifically what's credit card stacking, what is the business capital. There are some really good videos. Here's one, your business capital is waiting. These videos are here so that you can also share them. Share them with any potential borrowers. You can use them in posts on LinkedIn and Facebook or whatever you might need to. We're also creating more just unique videos, strictly like animated videos just about the programs themselves as well. I'll be sending out the link to the YouTube channel as we start to use this in our marketing efforts so that you have them. But these things talk about business capital. There's programs in here about the 100% financing for fix and flips, and videos like this. We kind of dive into the programs themselves and how they work, and we talk about the criteria and all of those things. So we want to make some of this as much as we can the information available to the public, so that when you need understanding about them, you can also refer to these. But you can also say, hey, you know what? There's a program that we have. Let me share a YouTube video with you as well, so that you can begin to use these also in your marketing and promoting, so that folks understand it. There's videos in here about the 100% fix and flips, the programs that we offer there for the 100% as well. Some really good videos kind of outlining and explaining how these programs work. You know, we're going to just continue to update and upload these programs as we push them out in our marketing as well. One thing to know about the way that we market too, a lot of times when leads come in, some of you have noticed this already, but as leads come in, we don't always just service those internally. What we try to do is connect them with an affiliate. So don't be surprised if you get a call and we say, hey, you know what? We've got a lead for you based on the marketing that we've done. And the marketing that we do internally is not necessarily to override what the affiliates are doing. It's actually more so just to keep bringing in business and then connect it to affiliates as well. So that's just a side note, neither here nor there, but it's just kind of the way that we like to do things. So we're creating these channels as another means for you to be able to not only get content out, but so that you honestly don't have to sit and talk about every program on your own. You can share the videos, have folks watch it. You can push it into any social media platform, whether you're doing LinkedIn, Facebook, Instagram. Some people are using blog platforms like Medium, which is also like, it's kind of like a well-kept secret, like on the business side, not as efficient as like a LinkedIn, but still a great platform. But the great thing about YouTube is that the video, they give you the share links, they can be embedded anywhere. Some of you have your own sites that you use as well, that you refer business back into RFS from using those sites as lead generation tools. So you can start to use like all of these videos and this content within a lot of those systems as well. So just wanted to share that with you too. We've got a new Facebook group, not a new Facebook group, but a Facebook channel set up for RFS as well. And we've started loading videos and content into that Facebook page. So we have the Facebook, the LinkedIn, and the YouTube channels all being built out right now. We're putting a pretty steady focus efforts into doing that, so that we can start to use those and that you guys will have full access to those things as well. One of the reasons behind these videos too is helping your borrowers understand, like, how does the program work, right? We have a lot of affiliates that are new to this too, and it can become cumbersome to try to explain something. And one of the things I got to stress is that you keep the what they call the KISS method, keep it simple. Keep it as simple as possible. You know, when you're having conversations with these borrowers, what you want to be able to do is highlight, you know, what the programs are and how it works. You know, they want to know, hey, my score is this. Can I qualify? Yes, you can. And we have a program that's, you know, an asset based, or we have one that's score driven. Here's how the score driven program works. You know, at a, you know, XYZ. If it's a, you know, for this particular one, if you got a 620 or better score, we can get you 95% on the loan to cost, 75% on the after repaired value. You know, just things of that nature, so that you don't necessarily have to get too far into how the programs themselves work, but you can share these things. We can share these types of details through videos, help you to learn it, but in your conversations, again, keep it high level. You don't want to dig too far into the details on those initial conversations. Yeah, you want to understand what they're looking for, what their score is, what their cash reserves are. If it's a business loan, it's just a matter, again, what's your score? And then what do your revenues look like for your business? Just very, very basic things, so that we understand where are we going to place them, what are we going to do. You know, folks that are looking for business capital, how much is it, how much are they looking for? These are the questions that they fill out in our forms that gives us those details. But, you know, again, it's the score, time in business, how much cash are they looking for, what do their revenues look like, and then we figure out, are we going to put them just on a revenue-based program, or are we going to put them on some type of score-driven program as well? So I'm looking, I'm going to switch gears for a second. I see some of the questions in the chat. I see Justin's got a question about rates. Phil mentioned that we have rates as low as 3%, but the highlights say starting at 9.99. So let me get into that a little bit. The rates that start at the 3%, when we're as an FHA correspondent lender, for example, on some of those deals that are new construction, and I think those deals are like $1 million and up on the new construction, maybe even 4 million and up on those new construction. Then we have programs at refinances and acquisitions at about $1 million. If we're doing the correspondent lending through some of those FHA programs, or whether it's multifamily purchase acquisition or new construction or portfolio acquisitions, we can do those types of deals at 3% rates. On certain commercial acquisitions, which are just like office buildings, again, or apartment buildings, we do have programs starting at 3%. When we're looking at the investor side, the folks that are looking to do the fix and flips and those types of deals, those are where you get into the private money. The acquisitions for, let's say someone is looking to buy like some type of multifamily unit, and they want to buy it, but it needs some renovations or some updates and things like that. Or they're looking for a short-term bridge loan, 12 months, 24 months, 36 months, 1 to 3 years. Those are the types of deals that are typically in those 9.99%. And that's just the hard money. Now you're talking hard money, private money, fix and flip rates for single family up to duplex, triplex, fourplexes. Those are where you're talking those rates, because they're going to involve some type of rehab or construction with it, right? So the 3% rates are more so for just the straight, you know, vanilla, like we're gonna actually purchase a bunch of buildings and hold it 30 years if they want to go the FHA route, or if they're thinking of new construction. I've seen some of those rates even start at 2.9%. So there's kind of a difference there between the 3% and the 9.99. You know, the 9.99 rates are more so like on our fix and flip side, hard money style. And then there's folks out there who are just looking to just do straight acquisitions. You know, they buy apartment buildings all the time, and they're just looking to go that route on the 30 years. So when we look at those deals, we can decipher that. What you haven't seen yet in the Facebook, in YouTube and the Facebook channel are the videos surrounding straight, just pure commercial property financing. So we're creating, again, some more like one-off videos surrounding those as well, so that you can get more education around some of the things that are those 3% deals. You know, we had this morning, there was a submission for, there were actually two, and including the one yesterday. Funny enough, there were 3 doctors purchasing buildings. One doctor is just purchasing the practice building that he's been leasing for 10 years, and something like that is just a straight, it's a, you know, $1.3 million acquisition. The gentleman had a 780 score, I think around $120,000 cash in the bank. Deals like that are more just straightforward purchase, you know, acquisition type deals. So on stuff like that, they're going to be looking at really good rates on those types of acquisitions. So I haven't priced it out yet, but that's just an example of one of those things. It's just a business owner looking to buy the building, buy the real estate that they've been leasing for a long time. They run a practice there. It's just another acquisition for them. So those are some of the things that run on some of those better rates for you guys. So with that being said, I want to also open it up to any questions that you guys have on any of the things that we've covered so far, or if there's anything else, Shaw, Pat, Lex, anything that we need to share as well, or even Sherry.
One thing, just because I ran into it recently, and this is more for people who are doing deals with the same client over and over again. Don't get complacent about that person's credit score. Just because it was something recently doesn't mean it's going to stay there. I had a deal recently that thought we were good to go. It was kind of, the score was moving up, only to find out yesterday that their score is now at a 640, which completely threw out the whole model for the terms. So just be careful.
Yeah. Do you know what threw their score out?
Probably too many inquiries. They do a lot of deals. This is one of my regular groups in Florida. It's just been, I think I've been warning them they need to improve their credit because of the it's going to make things more expensive if they don't. So and they're always being very price sensitive, but at the same time, yeah, it was all good to go, and then okay, well, what's your want to confirm your score? Oh, it's 640 now. I'm like, oh shoot.
Yeah. Did they, are they using any credit monitoring systems to keep an eye on it?
Again, I've been harping on it for months for them to at least entertain, get into credit repair. It's like, yeah, we'll get to it. And then they never do until now it's become an issue. But, granted, some of our lenders are asset based, like you mentioned earlier, which helps. But at the same time, multiple deals means multiple inquiries to also to your earlier point. So you have to stay on top of it. I would say, get a fresh credit report at least every 90 days from your regular clients.
Yeah. And to that note too, we try to tell folks, subscribe to some type of credit service. These days, if you got any credit card, you're kind of seeing where your score is. There's some good ones out there. The Credit Karmas are not so great because there's like a 50-point credit swing on there. But it's still good to know that. But what we try to do in thinking about how do we provide solutions, two of the investors I've talked to this week, I said, hey, you know what? If you're trying to go after 3 deals a month and you want to purchase them, rehab them, and then you want to keep them and hold them, we need to build a strategy around that. And so for that, I explained to them, like on our 7X line of credits, or even we have a 7X or 3X, and then we have another that's really just based on experience, net worth and property sold that can be anywhere in the millions. When we mentioned that as well, I explained to them, like, for what you're needing, you don't want to go out there and get multiple credit hits every month. Like, what we have is a program that will allow you to get on an exposure line of credit to where you can do the multiple flips and then refinance them into the longer term notes, and they'll only hit your credit like once every 6 months, right? And the whole point of that was the fact that you cannot be out there letting everyone hit every time you go do a new flip and you get you take it to a different lender and you get another ding. That's not the way to build your business. But they say a lot of times entrepreneurs are risk takers, right? So they run full steam ahead. You know what I mean? And they don't necessarily stop and think about the ramifications. Most entrepreneurs they're just going like full steam. They want to get it done. They got the deal done, on to the next. But when we take the position more as a private capital consultant, we can actually say, hey, pause for a moment. Like, I know you're an investor. I know you're an entrepreneur. I know you're in the streets every day looking for deals, and you want to make sure that you got your money set up so that you can keep turning deals and you don't run into any obstacles in order to close. Well, that's why we're here. Like, we can put you on a program right now that will help you make 3 to 6 acquisitions a month. And we can even set it up so if we know you're going to keep that deal, we can put you in a rehab purchase deal. So you purchase, rehab it, and after 12 months, roll it right into, or even 8 or 9 months, roll you right into that 30-year note at 4.75% or 5.5%. We think that stuff out for them ahead of time. But when we have those conversations, we say, listen, like, I know what you're trying to do here, but we already have a solution in place to help you do that without your score suffering. And that's where you start to build the value in that relationship. And then we can talk about, 3 or 4 of the programs we have that can help them actually achieve that. And they just don't, it's funny, but as savvy and as sophisticated as some of the investors are that submit deals or walk in the door, they don't know all the options out there. They have no clue. When we're talking to them, they just, I don't know, I talked to this broker and that broker, but they don't really understand that there are solutions that can really take them through their entire business model, but help them by minimizing the credit pulls and the damage to their score. Because the problem is, like, when they're out there getting their score pulled all the time, they start at this great like 780 score where they're getting the best deals on the market. And then they take all these hits and now they're at a 600 score, and they move from getting these paper deals to now I just got to be asset driven or use an asset based score that takes them from, the 7.99% hard money to the 13% hard money. And all they do is they're so busy moving forward that they just adjust to say, okay, I got to pay more for the money. So what? I'm going to keep going. I hear it all the time. I got to pay more for the money. That's okay. I'll do it. There's still enough profit margin or profit potential in the deal. Well, when we look at that, we say, listen, you can still realize your full potential profit, and you don't have to take those higher rate loans if you just follow the plan that we'll help put together and help you utilize to continue like building and scaling your business. It's really kind of interesting, but that's why we're here. And again, like I said, I've seen that from some of the savviest real estate investors out there. I've got one right now with an 800 score. 800 score, and I think I don't know, 600,000 in liquidity, but just still didn't have the right game plan in place to continue to build their business. So it's things like that we add so much value in having those conversations and saying, hey, you know what? For where you want to go, we can help take you there, but we can help take you there in a way that lightens your burden and makes it easier with a real total solution for the long term. It's how you add the value, and it's how you convert them into a long-term business partner or borrower.
Yeah. The other thing too, basically, is especially from the newer investors out there, is take them through a working capital, plan first before they go try to buy a property, for 2 reasons. 1, they have the money to close. 2, the money will be seasoned, because some of the lenders we work with, you have to have that that kind of funding seasoned, and so it actually can be used for closing purposes. So it's kind of serves 2 purposes. We get 2 deals out of it. On top of that, they're a better setup to tackle whatever comes next.
Yeah, yep, that's right. Very, very good point. Looking at just a couple of quick questions too in the chat, some private questions here that have come over. Land deals, we are helping on land deals right now. We have some developers that we're just looking to we have actually got 3 or 4. Some that we're looking to just buy land to add to their inventory. So they wanted to buy 3 lots and hold it for future developments. We're helping on that now. We have other developers who have to buy 10 lots, but they're going to start building just on 1 or 2 lots now. They're not going to put forth the capital or the plan to build all 10 at one time. They want to buy all 10 and build 1 by 1 and sell. So not uncommon. They'll build the first 2 as spec. They'll sell them. They'll start on the next 2. Sell them. They'll start on the next 2. And maybe while they're building 1, someone comes in to buy. They get a contract on it. They start on, deal 5. We're doing those deals right now for those types of land developments. And then we've got some who just are trying to buy acreages of land, and they want to hold them. So we're doing deals like that as well. Just letting you guys know from the questions that have come in. So, all right, I know we've kind of covered a lot today, but the whole point of it is to start thinking in terms of really and truly being a private capital consultant. That's what we are. Some folks refer to it as a loan broker. And as you know, we have the Loan Broker Academy, which we actually now call it, really, it's a private capital consultant training is what it is. Not to make it a mouthful, but we don't want to be just brokers. I get complaints all the time, not about us, but just in talking to borrowers. I'm thinking of one right now is buying I think a 600,000 apartment building, and he said, man, before I got to you guys, I went through a couple of brokers, man, and all they were interested in is just charging me 4 points on the deal. And then I had to figure out in my cash flows, how am I spending another 30,000 to do this, just on fees and yada, yada. It's stuff like that. We don't want to be classified like that. You want to really, truly be seen as a private capital consultant, which gives, entrepreneurs and business owners access to capital. We have so many programs available on today's market, and now have the capacity to do more with the network that we have. So it's all about taking the perspective of how do you build a relationship and how do you help folks get access to the best possible capital on the markets. And that's how I look at it every day. It's not about selling, it's about sharing information. I've always found that when you can share information with someone, as long as that information meets with the demand that they have and it makes a connection, it sells itself. So with that being said, I know we're just under 40 minutes, but wanted it to keep it short today. If there's any questions, please feel free to ask. Now I'm just want to keep it open for a few more minutes for questions. If not, let's close out. Let's get back to work and close some deals before Christmas.
Hi, Milton. I have a question for Tom Shipper.
Mhm.
The second question I put in the chat there.
Yeah.
They're trying to calculate how much cash deposit they need. So in their mind, it's kind of 50% loan to value with the purchase price of 2 million, and they're selling it 3.9, and it's valued at 4 million. So do they still need 40% deposit, or?
So this is kind of a unique deal, right?
Mhm.
Typically on the land, it can be 30 to 40% down on the acquisition. So there's two things to this. Part of this is psychology, right?
Mhm.
They know now. Let me ask the second question first. You said that they have a contract already to sell it at almost 4 million. Is that correct?
At 3.9, and then they say the appraisal come in at 4. It turns out their software is the one that found the property. That's what their software is supposed to do, is go out and find deals like this.
Yeah.
So I guess
That's amazing. That's you're right about that. That's exactly what technology is supposed to do. So that for that, this is more so, believe it or not, along the lines of a transactional funding deal, right?
well, that's
Because
what
they
I
already have the
was
data.
wondering, can you do that on land? Because I said that to them. I said, if this was a fix and flip, I'd say it's transactional, because I said, how fast are you gonna do horizontal stuff on it? And he says, not unless the deal falls through with this person that's gonna buy it, they're just gonna flip it. They've got some.
So my first thing is, let's talk to our lender real quick and see if they can just structure it as a transactional deal, which they may be able to do.
Okay.
And the reason, and I'm not sure we can do that. That's an interesting one on land. There's two companies I can think of right now that could potentially help here. But let's see if we can structure it as a transactional deal first and foremost. And then if we cannot, their question is, then do they still have to put money down? If we can't do it as a transactional deal, then the answer to that would be yes. The reason they ask that question is, okay, do we need to go tie up 30 or 40% in order to then turn around and sell it? And here's the thing, here's the true answer to that. That is the risk they take, right? They want to flip that deal for 3.9 million and make a potential 2 million on the deal. Then yeah, you might need to risk your 40% to go make a truly exponential return, right? We will see if we can create a scenario where they don't have to do that though first.
Okay, he said they have raised close to 600K, but he says, I'd rather just do straight debt than, he says, pay the interest on the debt instead of the more expensive interest on the equity. But sounds like they have it if they have to dip into it.
Yeah, I think we might be able to create a transactional situation here for them, actually.
Okay.
And make some good commissions for you in the middle.
Okay, so should I just wait for you to reply to me by email or something?
I'll shoot you a quick email like right after this call, and we'll make sure we keep that one moving.
Okay, thank you.
All right, you're very welcome. Any other questions?
No questions, Milton, for me, but one thing I want to point out to people, and it's kind of crosses the line over into cannabis a little bit, but it can be applied to commercial deals in general. Please, please, please ask the borrower or ask the whoever sending the lead to you if they own the facility or they're leasing it. It makes such a difference on the funding. I can't stress that enough. It just changes everything from an underwriting point of view. And Milton's laughing. He
Yeah.
understands exactly what I'm getting at.
Oh my gosh, we get into those deals and they're like, yeah, well, I don't own the land, I'm just leasing it. So you want to finance a building or new construction on some dirt that you, like the risk on that is so complex. You know, if anything ever goes wrong on the land lease and and then this has happened, you know, the landowner just forecloses the dirt, they'll walk into a brand new property and just say thanks. You know, but again, entrepreneurs, man, they're moving forward. They just want to get a deal. Like, I know this is a lease, you know, they don't necessarily think of the risk towards the lender. How is the lender going to put a note on something that sits on something you really don't own, right? It's just some of those interesting things. But those types of deals are strong deals when it comes to, like, you know, Targets and Walmarts. They never own the land they're on. They just sign like a 99-year land lease is what they do. And so what we have found, especially here in Kansas City, a lot of those like Walmarts and super Targets are built, in super Walmarts or whatever, are built on land that used to really just be farmland. So it sits on these large things that have been redeveloped, and they just sign a 100-year lease on those things, man. And then, you know, whoever owns a property is certainly happy to go and do that. You know, it's an interesting way to look at it. But yes, very, very well said point, Shaw. Thank you. All right, well, with that, I think we're going to close out. We will have the recording put up into the new Thinkific platform just a little bit later on today for everyone to access. And I want to thank everyone just for taking time today, again, over the holidays. Let's continue to push forward and make some money. You know, right now we're working very, very diligently to try to keep closing deals quickly as fast as possible to make sure everyone has a good Christmas. So thanks again, everyone, for taking the time out
Thanks,
today.
Milton.
Thanks, Milton.
Thank you.
Hey, Milton, real quick, this is Steve. Can we have a quick 2-minute conversation after this?
Yes, I'll call you
All
in
right.
just a few minutes.
Thanks, bud. Bye, guys.